So hello again, and welcome to the next panel on how tokenization will redefine banking and payments. For this discussion, we have leaders from four of the most preeminent financial institutions: Citi, BNY, Swift, and JPMorgan. Before we kick off, maybe if we take 30 seconds each to briefly introduce yourselves and what your firms are doing in digital assets.
Ryan Rugg. I head up digital assets for Citi's TTS business. Been at the organization about 3 years now. The team that launched Citi Token Service, so look forward to sharing more.
Patrick Corker. I'm in the product and innovation division at BNY under Carolyn Weinberg, and we're focusing a lot on tokenization of all things, including many of the digital extensions of our traditional business today across cash collateral payments and fund infrastructure.
I'm Tom Zschach. I'm the Chief Innovation Officer for Swift. I've been in that role for 6 years now. And we've had some pretty exciting announcements just recently at the end of last year, both in terms of improving the customer experience for existing cross-border payments and the corresponding banking business model, as well as announcing adding a technical infrastructure layer, a blockchain layer on top of the Swift network, which we'll get a chance to talk about more later on in the session.
Hi everyone, I'm Nelli Zaltsman, and I lead our infrastructure partnerships for Kinexys at JPMorgan. Kinexys is JPMorgan's blockchain business unit. We've been exploring this space for about a decade, and we do everything from asset tokenization, providing external tokenization services, blockchain-based payments through blockchain deposit accounts, and of course, JPM Coin.
Excellent. So to kick us off, I want to take us back 1 year. Last year at this same summit, there was lots of momentum in digital assets. There was lots of discussion of 2025 being the inflection year, the pivotal year for adoption for TradFi. So we'd love to hear, has 2025 been an inflection point for institutional adoption, and if so, how?
Yeah, when we were prepping for this, it made me think back to a year ago when we were here and we were talking about how we were onboarding clients, we were processing multi-million-dollar transactions, to kind of looking back and reflect upon where we are. And this year, we're now processing billions. We now have a multitude, higher magnitude of clients on the platform. We've announced integrations with our solution, 24/7 USD clearing, to truly provide that multi-bank solution to our clients. We announced collaborations with Coinbase to be able to do, stables. So I think that it really was, a inflection point for us, and now we're starting to see, scalability and adoption across the platform.
I would completely agree with that. I think it was very important for the industry as a whole. BNY has been in this space for some time vis-a-vis its custody platform. We were the first GSIB to offer digital asset custody. But then extending that out into other areas has been a matter of quite a bit of investment over time. And admittedly, we've been a little quiet on the announcement front, but nonetheless building expeditiously to meet what I see as a market that is full force coming into digital assets, and particularly tokenization.
Yeah, 2025 has been quite a year, and before we kind of just jump ahead and talk about redefining banking and payments, I think it's really important to acknowledge a couple things, which is the fact that existing payment rails are going to be here for the foreseeable future. And what we're trying to do is to offer options and capabilities to our banks to be able to do cross-border payments better, right? So what we have today works. It has rule books. It's based on standards. It moves trillions of dollars every day. And I think everybody would quickly agree that we're going to be in a kind of a multi-chain, multi-ledger world for the foreseeable future, right? So what we're building on is experience and trust. And the decision and kind of the big move for us in 2025 was not only announcing the work that we're doing on the scheme, but also in terms of introducing the ledger and a blockchain infrastructure that actually runs on top of the Swift network. It doesn't replace the Swift network. Nothing's going away. What we're going to do is offer capabilities and options to our banks, starting with a fairly narrow use case, to be able to do cross-border payments how they want to do cross-border payments and leverage the infrastructure and the trust that they have today. And so this whole idea of kind of breaking down the barriers and making it easy, as new digital assets come online, whether they're a stablecoin, whether they're a tokenized deposit, in other parts of the world outside of the US, CBDCs, offering that capability to be able to not only extend into new asset types and new forms of value, but the new settlement locations is exactly the right way to go. And so we're really excited about options that we could offer, but we're also very realistic about how the world runs today. And we don't have this view that we're in a parallel universe and you're somehow going to come in on a Monday, flip the switch, and everything's going to be new. Some people think that. We're not in that camp, and that's not what we're seeing as evidence in the marketplace. And we are seeing, I think in 2025, a really serious attempt to kind of step into how institutions operate today, not the other way around, right? And that's pretty well known, and there's a lot to leverage there.
I think for JPMorgan, 2025 was maybe a year where we got to reap some of the investments we've been making earlier on as the industry mindset shifted. A lot of what we build is ultimately meant for network use, network adoption. And so what we saw in 2025 were our peers coming to the table, some of our larger clients coming to the table, and also the ability to expand out some of our know-how beyond sort of a single ecosystem and reach out, integrate with public blockchain. And I think that mindset shift is going to bear further fruit in the years to come.
Excellent. So it looks there's been pieces around the utility and early adoption, and then there's continued experimentation and bridging a bit between TradFi and on-chain, which is obviously core to the Ondo vision. Maybe if we start looking forward, one of the pieces also that's been significantly growing over the past year is moving from pilots to at-scale applications. We touched on a few. That being said, a lot of the on-chain activity remains retail. I think, Tom, you said in our discussion as we were preparing, $50 is not $50 million. And so as you think of institutional adoption, what are the primary unlocks, whether technology, regulatory, product market fit? I'm sure there's a bit of all of the above. So we'd love to hear to you, in particular, as you think of next year, what are the one or two unlocks that we truly need to address as an industry?
I think one of the things that, was a core to our design was making it fully integrated into our traditional systems. So the way that we view Citi Token Service is it's just a drop-down box, and that we completely obfuscate all the complexity for day one for our clients. They don't have to host a node, they don't have to have a wallet, they don't have to manage the keys, all the operations around it, we do for them. They don't actually, it's covered under their MSA from an account standpoint also. Because one of the feedbacks that we got from our clients was they have hundreds, if not thousands, of accounts across these multitude of banks across the globe. And they don't want additional operation. They want to really streamline that. So being able to, if a client wants to do a transaction on Saturday morning from New York to Singapore, literally we'll mint it in New York, we'll send it to Singapore, and we'll burn it. And it's also cash for cash in their account. And that was by design also. Again, meeting our institutional clients where they are, where their Treasury ERP systems, a lot of them can't even handle real time, let alone account for tokens. So I think that, if you think about technology over time and some of the technologies that were adopted versus not, you think of like the story between the BlackBerry and the iPhone. Like, why was the BlackBerry not widely adopted? It wasn't super intuitive and easy to use and like seamless. So kind of taking that into our core design when we're doing it, that we're viewing this just as another set of payment rails, as like Tom mentioned, that, it will solve some pain points to create that 24/7, 365, but clients may not always want to use it. So the fully integrated into their systems we thought was really important, where they didn't have to have a standalone kind of system for it.
I think that's very well said, and tying it back to some of Tom's earlier comments, these things do take time, and they take time for a number of reasons, not least of which is to obfuscate away some of the complexity for our customers, which is important for institutional adoption. It's largely where we're focused, given our remit as much of the financial plumbing of the existing ecosystem. For us to say that the technology itself is capable of something is demonstrably true. And now what banks have done writ large, and BNY is an example of that, have funded things, they've staffed things, they are building things, but then to radiate outwards to the rest of the ecosystem and create standards for this technology that everyone can participate in is where a lot of us are spending time today.
Good. I think there's a couple of really important unlocks here, because on one hand, we see the demand for digital money, right? $300 billion of value sitting on chain with stable coins. But we still don't have clarity, for example, from regulators, and that being kind of harmonized across different parts of the world, that's going to be an acceptable asset, again, at scale. $50 is not $50 million. And so is a stablecoin going to be acceptable? When today the standard practice everywhere in the world is to settle these institutional payments in central bank money. A stablecoin is not central bank money. Right? I'm not saying they're bad. I'm not saying they're not useful in some corridors. But again, if we keep the institutional lens on that, that still needs to get worked out. What exactly are we going to use for the asset for settlement that fully extinguishes the liability that came along with the payment that's being requested cross-border? It's in some ways it's kind of subtle, but it's really important. The other one that I'm optimistic about, but there's still work to do, is how do we actually, and what do we do when we say we're going to settle a deposit token on chain? Because we know that privacy is table stakes in institutional finance, right? You're not just going to publish Bank A and Bank B did this amount at this time on a public blockchain with PII information. That's not happening, right? So privacy matters, but the temptation for open shared public infrastructure, like the network, the internet, like we see what's being built in Ethereum, for example, it's irresistible, right? We're going to get there. The question is, how are we going to get there? We're not going to do it on day one. We don't have to get there on day one. We can kind of start small and prove the value. But again, if we really want to get to scale, and we want to do that on a global basis and harmonize, what settlement looks like, these things need to get worked out. And there's really good conversations happening to do that. It's just not going to happen today or tomorrow. But I think we are going to get there over time.
I think for me, one of the greatest unlocks would be having the truly composable ecosystem that has long been the promise of this technology. And I think where there's a little bit of a footfall when we talk about TradFi use cases, especially, recent announcements about, one group can announce they're tokenizing equities and another announces they're, tokenizing cash, et cetera. And each of these are analyzed kind of independently. And people ask, well, what's the value add of just a tokenized equity or just tokenized cash? The conversation should actually be if you had an ecosystem that worked in a truly composable manner, what does that mean for these institutions that have both access to cash and equities? What does that mean for the way data moves with value? What does that mean for reconciliation and operational cost? I don't think we're having these kinds of conversations holistically enough, in part because I don't think a lot of people are actually looking at the whole ecosystem, but that's kind of a big passion of mine, so I do really feel strongly about that.
Matthieu, can I build on that? Because I think you hit it right on the head. The composability is probably the single most important innovation that comes out of blockchains. And that leads to interoperability. That leads to a way to have a shared rule book. That leads to a way to develop standards. Sometimes in a kind of a crypto native world, it's kind of a winner take all. Right, I have the best blockchain. Everybody should do something here. Let's make sure they don't exist, or we kind of dominate here. That's not how finance works globally. And if you don't have that composability, again, not only between new forms of value being on different blockchains, whether they're private or permissioned or fully open public blockchains, if you don't have that composability, you just never get to scale. And it might even turn out worse where a group of financial institutions in one part of the world do something one way and they do something different in another part of the world, and then they can never speak and they build fragmentation. And you just start eroding the benefits of kind of the blockchain and having these digital assets in the first place. So it's all going to anchor on composability, and they have to be able to speak to each other in a standardized, compliant way.
I think that's right. I think the other thing that BNY is focused on here is interoperability. And so even if you just take the clearest form of growth in the space and where there is institutional adoption today, which is generally cash, so stable coins, deposit tokens, et cetera, we're seeing the accordion draw out. There will be many stable coins, there will be many deposit tokens. How do those things talk to each other? How do the platforms move value across ecosystems as people build to some degree in silos, which is how things have worked historically, but we have to connect those dots, and that's where we're focused.
And I think what the key thing is, when I joined Citi 3 years ago, we were part of several of these different consortiums and working groups, but we couldn't move a token safely and soundly around the four walls of our own institution. And building up that, there's a lot of legal compliance, regulatory considerations. Every branch we rolled out to, getting, making sure we get regulatory approval on it. So I think that now that a lot of banks are at the standpoint that they have a token, no one wants just a Citi token. We fully recognize that. Like, all of our clients want a multi-bank token, and working with these different consortiums, also integrating into our solution 24/7. So we're a corresponding bank for, I think, 1,500 plus banks. Of those 1,500 banks, 300 are on a solution called 24/7 USD clearing. So right now, we announced that at Sibos that we were going to integrate into 24/7. So being able to provide that as these consortiums, as these networks continue to evolve, as legislation and regulation starts to shape around this space. But like, our mission has always been creating a network that is multi-bank, multi-asset, multi-network, always on, and how you kind of lay those foundations. And now that we have cash on ledger in various forms, if it's stables, if it's tokenized deposits, CBDC, you can start bringing those other assets as well on.
And building on this topic of interoperability, we have, in the uniqueness of the summit, is a combination of TradFis and also an audience following us online of CEOs, founders of digital natives. How do you see, as the industry matures, the collaboration between these digital native ecosystems and TradFis? What are some of the observations, what has worked, and what are some of the, I think you brought up Nelli and Tom last week, misconceptions of how to work together between TradFi and digital natives?
Sure, I can start that one. I've said this before in other panels. I think for a long time, due to various factors, there has been, like Tom said, a winner takes all mentality. It has to be TradFi versus DeFi, or there's some animosity there. I always tell people, my business is to be a payments provider at a bank, right? And it always surprises people when I tell them, JPMorgan, as a payments business, services all of JPMorgan's other competitors and other businesses, right? So markets, competitors, broker dealers. We are known as the bank to other international banks. We're a very large US dollar clearer. It is part of our business to understand where our clients want to do payments business and support those ecosystems as long as they're safe, sound, and legal, right? And so for me, I kind of alluded to this in my last answer, I really feel we've come to a point where we can really double down and build those bridges. My goal is to have a good product that allows our clients to pay for assets that are moving the most efficiently. And if efficiently means 24/7, or if it means moving it programmatically, which is a huge value proposition we haven't really touched on, that is what I want my payments product to do, and I want it to do it relative to an asset that my client wants. And so, yeah, I think, we are looking at this with a very collaborative mindset, not just across TradFi, but across different ecosystems.
Yeah, I think BNY is very similarly situated. I think it starts with first principles, which is success is not mutually exclusive. And if you believe in the tokenization of all things as we do over some period of time, there's going to be plenty of room for BNY to do great things for their customer and partners, as well as crypto native firms that have built something innovative and compelling to either partner with us or the ecosystem. I think our goal is to power the platform, power the ecosystem. And in many ways, we are customers, but we are also partners. We're advisors, we're thought sharers, and in some ways, we do support some of the infrastructure, as mentioned earlier, for the traditional ecosystem. So.
Yeah, having been in this space for a decade now, which I think sounds crazy, and seeing various strategies. The one that, if it was, my R3 days working at a fintech startup to working for a global system integrator to now working at Citi, it has to be a combination of build, buy, partner. You have to be willing to, invest in the infrastructure, build some of it out, but also partner. Like I mentioned our Coinbase collaboration, there's a lot of great companies out there to invest in, as well as invest. And, we've invested in Finality, we've invested in BVNK, and we'll continue to invest in these networks. So I think that, is a true collaboration. Like Nelli hit it also, a lot of these, different fintechs out here are our clients, and we're servicing them across a multitude of different businesses and partner to help them really develop and scale their business and also integrate into our traditional businesses. So I think it's a true partnership across the ecosystem, but I think that, some of those misnomers out there about either or, it's much more of a collaborative approach. And, we have conversations daily, if not hourly, with a lot of these fintechs here today.
I love to attend events like this, right? And I don't use the traditional word anymore. It's just finance, right? It's like I don't know how we got this. I think somebody on crypto Twitter came up with this traditional finance thing, and it just stuck. But it's just finance. It's actually how things work today. There's nothing wrong with that. And in a lot of ways, there's a lot of things that work really well. But I love events like this. And I'll listen to a fintech or somebody who's coming from crypto native, and now their target is to go after regulated financial institutions. And my question for them is very simple. Like, how are you not on the SWIFT network? You just said your stated goal is to get to every regulated financial institution in the world. Well, guess what? There's a way to do that. And it's faster than you think, and it's cheaper than you think, and it probably is much more beneficial than you think. And it doesn't mean you have to change your business model, but if you really want the distribution, you want connectivity to all the regulated financials, the banks, the market infrastructures, how could you not be on SWIFT? It's a good question. I get good answers too, by the way. Get really good answers.
I love the point on finance. And so if we think of finance broadly, and we project ourselves 5-10 years from now, and maybe briefly give a sense for each of you, what is the most transformative application you're looking towards as it relates to tokenization for each of your businesses?
I'll start. So I think that now that we have cash on ledger and it's pretty established, and you're starting to see it scale. We talked about, we opened kind of where we are in 25 versus where we are now, processing millions versus processing billions. I think the next evolution is really that multi-asset, right? That we've talked about DVP and atomic settlement for ages, right? But I think back 10 years ago when I was at R3 and we're tokenizing bonds and equities, we were always going back to TradFi rails to settle. It was still like inefficient. And now that we have that cash leg on ledger, I think we're going to see more. You see more and more asset managers announcing different, funds out there, tokenized money market funds, CP. I think we're going to continue to see that. So I think in a year from now, when we're back here, we'll be talking about, the realization of that and starting to scale.
I think that's very well said. I mean, I think right now I wouldn't point to a specific product or product primitive. I would say it's about the promise versus the reality. And so 26 is a very much rubber meet the road year for many of us who've invested in this space and said we want to do this within the context of financial services institutions, which is a choice. And we're working with many of the people in this room and others to say, okay, what are the right pieces of technology, whether we build them ourselves or whether we partner with others to achieve that scale. And it's a very metrics-oriented conversation. And I think we'll get there, but I think having achieved any piece of that will be critical.
Yeah, I would just build on that. I mean, I think it's all about scale, right? You can start whatever initiative you want, and you can do POCs, and you can do what I call onesies and twosies. But if you can't get to scale, then it's kind of not worth it. And to actually complicate things more, we're not far off from algorithms making decisions that humans make, whether that's liquidity, whether that's treasury capital management, whether that's risk decisions or even payment decisions. We're not very far off from that. And so if you can't scale with what we have today with the institutional business, you have no chance of keeping up when algorithms start making those decisions for you. And in my view, we're not too far off from that, and there's still some other things that need to be added to the stack to make that possible.
I guess, I agree with everything that's been said. Maybe just to add, as we do look for scale, and we've talked about the importance of composability, as we focus on what the cash leg of that looks like and what is most interoperable, I think something we don't discuss enough, which I think will really come to a head this year and next year, is how do we find scale in tokenized cash without challenging or straining certain core principles around the availability of liquidity and credit in our system, which is a discussion we'll have to be having this year as these projects grow. And I think the other development where we probably need more dialogue as we ramp up the use of various infrastructures is how do we continue to evolve the security of blockchain infrastructure, especially with the advancements in quantum and AI on our feet.
Excellent. Well, on that note, thank you very much to all our panelists, and have a great rest of the day.
Thank you.
Thank you.